The Bank of Canada increased interest rates by 25 basis points this week as expected, and also signalled that potentially more interest rate hikes could be ahead. Bank of Canada's Governor Macklem stated that the progress in price stability could stall, and if some upward surprises emerge, and inflation could start to go back up. Furthermore, Macklem said that further rate decisions will be guided by incoming data and the inflation outlook. So they're not ruling out more interest rate hikes, which can support the CAD. So will the CAD keep gaining after the Bank of Canada's latest meeting? On the same day of the meeting this week, we also had a very low US CPI print. The core inflation reading, which is in intense focus from central banks right now, came in at 4.8%, below the market's forecast and, importantly, below the market's minimum forecast. These two events, on the same day, sent the US dollar CAD pair sharply lower. Can US dollar CAD falls keep drifting lower? Now, from a seasonal perspective, between the 12th of July and the 31st of July, the dollar CAD has lost value over 70% of the time for an average fall of 1.06%. The largest fall was here in 2009. So will prices drop again this year? Major trade risks. Previous seasonal patterns do not play out every year. And don't forget that shifting narratives and US data will also strongly impact the US dollar CAD. So there are a number of risks to this outlook. Remember that HYCM clients can access the Season X product in order to analyze over 25,000 different currencies, indices, commodities, as well as individual stocks. And all you need to do is contact your account manager for a free trial and you can get started right away. Certain products and services mentioned herein may or may not be available to all clients, depending on which HYCM Capital Markets Group entity their trading account adheres to.